Hello everyone, I am Apeksha and I welcome you back to TMR Talks. Today's video is about an IPO and it is the very first IPO of 2021 and it is launched by IRFC, Indian Railway Finance Corporation. So the company is planning to raise 4,600 crores from the market. Its principal business is to borrow the funds from financial markets and to finance the acquisition or the creation of assets which are then leased out to Indian Railway. Basically, it is the borrowing arm of Indian Railways and it is wholly owned by Government of India. It is also registered as a NBFC with RBI and it is classified under this infrastructure finance company category. Now let us go ahead and talk about the segments in which they operate. So the very first is leasing. Under leasing, the company finances the rolling stock assets and project assets of Indian Railway. So by rolling stock asset, what I mean is locomotives, coaches, electric multiple units, trolleys. So all this is included under the rolling stock assets. What happens is Ministry of Railway takes these assets on lease from IRFC. So the possession is with Ministry of Railway, but the title, the legal title of that asset is with IRFC. And this lease period is typically for a 30-year duration. So the starting 15 years is called as the primary lease component and the next 15 years is actually the secondary component. So as a part of the lease, the recovery of the principal and the interest amount is actually done during the primary lease period. And at the end of the lease, the assets are transferred to Ministry of Railway for a nominal price. So they are basically sold at the end. The company has adopted a cost plus lease arrangement. So this is to ensure that IRFC is getting a net interest margin for the entire operation that they have been doing. This chart will show you that more than 75% of the rolling stock assets are financed by IRFC in the past 3 years. Talking about the value of rolling stock, look at this. It has been consistently increasing since the last 5 years. Coming to the next segment, which is borrowing. So IRFC has been meeting the funding requirements from various sources, as you can see in this chart. And the funding plan of IRFC is carried out with the prime objective to minimize the price of borrowing, which in turn will help the Indian Railways. And the third segment, which is lending. So here also they have the presence. They have been lending to various different companies of railway sector. Let us go ahead and talk about the financials of the company. So here is the total income and PAT, and we can see that it is in an uptrend. And here is a pie chart which will give you the breakup of total revenue. So this gives the breakup of total revenue for 2020 financial year, and we can see that 80% of the income is generated through the leasing segment and rest is generated through lending activities, and there is a very nominal amount of other income and dividend income as well. Now let us go to the other financial ratios that are mentioned over here. So there is net interest margin. So it is a very important factor for any NBFC. It is approximately around 1.5%. Now when you look at it, it of course appears to be very low at first glance, but we need to consider one very crucial pointer, that the company has no NPA. As you can see, they have mentioned nil. So basically the company has no risk of NPA, which is a very important risk for banking sector and NBFC companies, right? So that is totally not there over here. Plus, and that is why you can also see that the capital adequacy ratio is excellent. Coming down to the return on assets, it is not really in a very good shape, but the ROE is doing better. It is approximately around 12%. Coming down to the valuation ratios, as you can see that the company is offering the share exactly at the book value. So the company is giving the share at 26 rupees and the book value is as well 26. After the IPO, the book value is going to go up to 39.7. So which is a good factor for the company, and the valuation is also of course on a lesser side. Coming down to the offer details, the issue opens on 18th Jan and it will go on till 20th Jan. They are planning to raise 4,600 crores in total. So out of which offer for sale is approximately 1,500 crores and fresh issue is approximately 3,000 crores. Post IPO, the promoter holding will go down to 86.4%. So this is the objective of the offer. So basically they have to meet their capital requirements which will arise because of the future expansion plans. we understand that the growth of this company is directly related to the expansion plans of Indian Railways. So as and when the railways grows, this company will be getting the business to raise the money, raise the funds for their assets or to lend. So railway has already released their vision plan for 2024 as well as 2023. As you can see over here, the national rail plan, I've put out a few pointers from the national rail plan of 2024. And also this chart will give you a breakup of the capital expenditure which has been done from financial year 16 to financial year 2020. So you can see how they have raised the funds from different sources out of this entire funding which has been done in this period, which is 8,560 billion. Approximately 30% on an average has been done by IRFC. Now specifically, if I were to give you the figure of FY20, total 44% of the funding was managed only by IRFC, and according to the management of the company, they believe that 70% of the funding for FY 2021 will be managed by them. Coming to the conclusion, we understand that there is a huge scope of growth in Indian Railways which will in turn help this company. The company has got stable operations with no risk because they will not have any NPAs, plus the financials are also strong. I also want to add one more important point here. So according to the management of the company, they are also open to giving finance to the private players that might enter in the future. So if government is ready to give some kind of license for operating a few lines to any private companies, these guys are going to give the loan to them. That's one thing. Plus they can give the loan to any other sector which will have any kind of forward integration or backward integration with Indian Railways. So that is something which tells us that in the future, if there are private players entering, so yes, this company will benefit out of it because they will be raising the funds for them as well. So according to us, we think that you can go ahead with this company. You can apply for the IPO. If you have any questions, doubts or suggestions, you can put it down in the comment section. And of course, if you haven't subscribed to our channel already, please do it. We do come up with different videos related to financial analysis, economic analysis, etc. So that's it from my end. Thank you so much.